Welcome to Trading Airs, the Trader's Edge. I'm Jim Iuorio. That's Bob Iaccino. And by the way, we need help from the viewers right away because when Bobby and I was busting his balls for being my sidekick, saying he was the Tonto to my Lone Ranger or the Robin to my Batman, which is obviously silly. But he said both those sidekicks are cool. So I want him to be the Shaggy to my guy with the red scarf who gets all the chicks in the van.
What is the guy with the red scarf's name?
What's the guy? If anyone gets 3 attaboys, if they can post what the name of the guy with the red scarf on Scooby-Doo was, because we'd greatly appreciate that. Bob, we're going to talk about oil, but first I want to talk a conversation I had with a young kid who just started on the trading floor today. And I kind of think he looked at me like I was an oddity, which is kind of what I'm going for. You know what I mean? But anyway, I said to him, if there's one piece of advice I could give you, if you're going to stay on this trading floor, however it morphs to, right now there's like 250, 300 people. So I'm not going to be here long, but if you're going to stay here in this trading floor, you want everybody to think you're at least this much unhinged, volatile, and crazy, because then they'll treat you differently on a trading floor and better. Do you agree?
Yeah, I do. I absolutely do. I don't know what the dynamic of the trading floor is now, but I remember when I started on the trading floor, I decided to be a little bit different. I was going to wear an actually correctly knotted tie, as opposed to one of those ragged things. Yeah. And I wore it for probably about 3-4 months. And then finally, I don't remember who it was, somebody in the spread pit area was like, will you take that fucking tie down? And they all started throwing shit at me. And I was like, all right, I'm done with this. I'm going to conform.
Perfect. I remember that one of my favorite floor things too, like about 8 or 9 years ago, some kids started on the floor. And back then we were still on the big floor. And there's quite a lot of people. And I was on phones talking to people. I was throwing a bit of a tantrum. And as you know, from that, I never actually lose my temper, but they think I lose my temper every other day, just because the squeaky wheel gets the oil. So I'm throwing one of my temper tantrum, and this kid is his first day on the floor, and he looks over at me from like 50 yards away, and he's looking at me, and I just go to him like this with the meanest look I can find. So anyway, so then the next day he walks by, I look over again. The third day he starts doing it to me. So now years go by. I didn't know the kid's name. Whenever we see each other on the escalator, we just do this. And finally, after about 3 or 4 years, I introduced myself. He's become one of my friends, Tyler. But I think that's kind of funny. That's a trading floor thing that people don't know.
Yeah. And it's funny that you didn't know his name. I still, to this day, count as very close friends about 20 people whose names I don't know.
Just you call them by their badge? Yeah.
By their badges. Yeah.
That's it's crazy, isn't it? One time, like what someone said to me, you bet is coming. And I'm like, you bet? I don't know you bet. He's like, he's one of your buddies. You've literally known him for 25 years, Mike Pointsky. And I was like, oh no. I said that wrong. Mike Pointsky's coming. I knew him as You Bet, which was his
name.
Anyway, so oil got the crap beat out of it today. I thought that was a very significant move, particularly considering that copper went through the roof. Now, I want, before the guest comes, and we're bringing a great guest on, so you guys, it's not just going to be Bobby and I spouting our bullshit the whole time. Although I like our bullshit. I hope you guys do too. But crude went lower. Same time, copper went through the roof. Seems like a tariff thing, probably, but I wonder about the oil component of it. What are you seeing there?
So a couple of things. I don't know if anybody caught this, but on March 3rd, OPEC put out a press release, which they don't do that often, saying that 8 countries who had agreed to voluntary production cuts 2 years ago were going to be sticking to the agreement made on December 5th of last year and renewing production. In other words, taking those production cuts away. So that's number one.
Increasing the supply, right?
Yeah, an increase in supply into what was already a weak market. If you look at a crude oil chart, and I could probably put one up that might help. As a matter of fact, I think I will do that. So Luis, when you see this go up there, can you just go ahead and put it up, please? When you look at the market that already existed when they had that press release, okay, it was weak, right? So far, if you go to the recent all-time high, January 15th, it's not the all-time high, but it's the cycle high, as I call it. We're down about 14% through today's close. Okay, so let me get rid of this now. We broke the 200-day moving average on the downside on the 22nd. We tested it and failed. The 200, or that's the 50. I'm sorry, not the 200. 50. My bad. We tested the 50 and failed on February 3rd. And then we just continually dropped down. And here you got Mike Arnold's rotation zone. You can see we went up into the rotation zone and failed, up into the rotation zone and failed, rotation zone failure, rotation zone failure. Those are all technical things. But now I'm going to have to go to a weekly chart to go and look how far back. This is a continuous crude oil futures chart to go look at maybe how far back of a low we've actually reached. So the low today goes all the way back to May 1st of 2023.
Yikes.
So that's a significant move. Now we've got that happening. This is a weekly chart, and you can see we've had weekly declining volumes. So there's not necessarily new positions being put on this. Back to the fundamental side, we obviously have the tariffs. Something I'm going to share another screen here. I think I can just go ahead and stop share and share something else. So when you see this one, Luis, can you please put this up as well? This is going to be refinery utilization weekly. Okay. When you look at what's happened here, refinery utilization, and a lot of people don't look at it. I look at it all the time. Okay. It represents demand on the ground. Now we got EIA today. Everybody saw there was a build and a build, right? There was a build in crude oil and there was a build in gasoline stockpiles. I'm sorry, gasoline stockpiles actually decreased by 1.4 million and crude increased. We had a build in crude oil of about 3.6 million barrels. So why, with a decrease in gasoline, do we have this drop in crude oil prices? It's because of what you're seeing on the screen here. If you look, and I'm going to zoom in on it a little bit here. All right. If you look going from like the end of last year, we were all in the 90s here. Now, what is refinery utilization? It's the amount of the available refinery capacity that's being used to refine product. So it literally represents demand on the ground, right? Yeah. What are the refineries being asked to produce? Or what are people willing to buy? Or what do the refineries think they're going to be able to sell? What we saw on about the beginning of January, and this is not any sort of turnaround, but I'll talk about that in a second, was a steady decline into the 80s, right? You had 84.5, 85, 84.9, 86, 85.9.
And that reflects weakening demand, correct?
Weakening demand. Okay. Now, some people say, well, that could represent refinery turnaround. What is turnaround? It's the retooling of refineries to produce winter blend or summer blend gasoline. To me, this is too early to be retooling into summer blend gasoline. Now, it could be. And if it is, you'll see a spike here and you'll see a floor in crude oil as well as RBOB, which is gasoline futures. If this is just early retooling for summer blend gasoline. But if it is, that means they have gasoline stockpiled. Right. So they don't mind retooling for the summer blend because they think they have plenty of winter blend to sell, which also then means, right, lower demand, right, because they have enough in store.
So you saw the Atlanta Fed GDP now crack the furthest it's cracked in a two frames in 5 years. So since 2020, it just absolutely collapsed. And it is right now telling us not only that we're in a recessionary period, but it could be significant. Negative 2.8% GDP is not, that's nothing to sneeze at. You know what I mean? Right. It's a big deal. Do you think crude is reflecting that, or do you think it's bullshit? What do you think it is?
I don't think we dropped from positive 2+ to negative 2.8. I don't see how that's possible given
Are you saying it's nefarious, you think?
No, I think that so if you look at the inputs to the Atlanta Fed GDP, okay, it takes a bunch of different data sets, one of which is crude oil prices, and it calculates where the GDP would be. So when you have flash moves in things, I'll take equities and crude oil as an example. You have a 14% drop in crude oil. We have 6 or 7% drop in the NASDAQ, I think, somewhere in that range. I can look at it and correct myself. When you have those things, they go into the Atlanta Fed calculation. I look at the Atlanta Fed GDP index the same way that I look at the CME Fed Watch tool. It's much more accurate, closer to the date of the actual release of the piece of data.
Right.
Yeah. Right. So I just think there's been some things that have happened. I'm just looking from the recent high. The NASDAQ is down about 7.5%.
That's what I thought it was more than that. Right.
Yeah, excuse me. So when you see things happening and you see some like for example, let's go to the Citigroup Economic Surprise Index. That has dropped dramatically. In other words, the Citibank Economic Surprise Index turned negative. So you're seeing a lot of these flash negative things that would affect the Atlanta Fed GDP now. I think it's too big of a move. So we can talk about the potential nefarious nature of that?
You can ask me because I have an answer. You
Yeah. What's your answer?
I think to not allow for the possibility that it's nefarious, that some of these, because remember, when
Yeah.
someone like Donald Trump is coming into office, all these people in government, they're somewhat collectivist by nature. They live in a socialist environment. That's what a government employee is. It's part of the collective. It's not on your own, eat what you kill. So for them to hate him in all these different organizations, to me, seems perfectly reasonable. For someone to calculate this data with trying to make the president look bad is not outrageous. I'm not saying that that's what happened, but it is certainly not outrageous. Do you agree?
Well, we kind of see that happening in other areas where the bureaucracy is not following the orders of the executive branch that they work for.
Right.
You know, we had all this uproar over USAID and the president's doing things that are illegal. And then yesterday or today, we got the decision from the US Supreme Court that foreign aid can't summarily be rejected by the president. Okay, fair enough. But this is a description of what the rules around USAID are, and it is executive branch, period. Congress literally gives recommendations and puts forth the money for it. And then the president can follow those recommendations or not. Now, really, since who took over for JFK? Lyndon Johnson.
Yeah.
He basically just took Congress's ideas and sent it. And that was the explosion of the NGOs that we all have pretty much come to the decision. I think any thinking person has come to the decision that some, if not most, of the NGOs are full of shit.
No question about
Right.
it.
I mean, I think we'll all come to that conclusion. So
get me in on that. Yeah. Like,
yeah,
I got an NGO.
Didn't I say that to you offline the other day? I wish I would have realized that. I was started an NGO 20 years ago.
Exactly.
Like, hey, CIA, where do you want me to send some of it? As long as I get to keep the rest.
Yeah. Okay. So let's talk about equity markets real quick too. So here's my thesis is that the economic data is declining, except for one, inflation numbers, 2.5, 2.9, 3.0, the last three CPIs. The market has now convinced itself that the impending tariffs, which I'm not even sure we should be believing the tariffs or not the tariffs. I don't know what the hell the guy's doing. And he
All right, I'm going to turn to something else, and I'm just going to add something to what Jimmy was saying. I don't know what the question was going to be, but essentially, there is one key component that I think matters. Actually, we'll call it two key components that matter a lot in the face of all these other economic situations slowing or even slowing down or even heading into those sort of bad territories. And that's manufacturing PMIs. Other than the Richmond manufacturing PMI, which is these are all the Fed PMIs, they've all turned up and they've all moved sort of strongly into expansion territory. And then you've got the ISM PMIs, which in the US, which have gotten stronger. This particular last week wasn't stronger, but when you do 3-month annualized, 6-month annualized, 12-month annualized, you have a situation where you're seeing ISM manufacturing PMI go higher. Top of that, the small to medium-sized business PMIs, the services ones are turning lower now, and the manufacturing ones are turning higher. On top of that, prices paid in those things. I don't know if you saw the ISM manufacturing prices paid through the roof. That's pre-tariffs.
Yeah.
For as soon as everybody wants to say, well, that's what happens with tariffs, right?
Right.
That was pre-tariff that happened. So it's interesting to see this. We could actually be seeing the green shoots. I shouldn't call them green shoots, moldy brown shoots of stagflation, which I've been expecting for about 2.5, 3 years.
Right. And to me, it seems like that's what the market's expecting as well, too. And that defines some of the weakness, which, by the way, the weakness is a lot about market positioning as well. We know that. We've been around a long time. Valuations were clearly stretched. Leadership was being questioned. The DeepSeek day, where all of a sudden NVIDIA and some of those names got pummeled, that was a big deal. You know, it was the market saying that those names might be overvalued. So I think we were primed for a pullback. But yes, I think stagflation is the key to that. And by the way, I'm so sorry that my mic went out, guys. And as Bobby knows, that whenever I start to have any sort of technology difficulties, I start It's the funniest thing. I start sweating. My body temperature goes up like 15 degrees and I start sweating through my shirt. No matter what it is, somebody else on one of the shows can be having technical problems. And it's just because technology scares the shit out of me. Does it? You're more used to it than I am, aren't you? You're less of a
Yeah.
caveman, obviously.
I think I am more used to it. I don't know that I'm less of a caveman. I might be a lot more of a caveman than you think. But the technology thing, I left the floor a long time ago.
Yeah. So you had to do all this
There were
stuff.
things I needed to adapt to. When I moved to California in 2000, when was it? 2005 was when I left the floor.
Right.
So in that entire time, I'm like, okay, so what's this excellent thing that everybody looked? I thought it was excellent, not Excel. So started building spreadsheets, started learning how to broadcast, and started learning the line I still use to this day. The same technology that we just got pissed off at allows us to do this.
Oh, there's no question.
So
I agree 100%.
go ahead and be fine with it.
One of the things I blamed, you remember when I worked on the trading floor for a guy by the name of John Murphy?
I
Good
do
friend,
remember John Murphy.
crazy.
Yeah.
He pissed a lot of people off because he was
Yes,
fiery.
he did.
But anyway, when he realized, this is 25 years ago, when he realized I was good at what I did, which was talking to the customers and executing the trades, he wanted it. So I did nothing else beside that. So he just gave me 2 assistants, one who was technology, one who was everything else. And anything, like I wasn't even supposed to leave the floor. I mean, unless I needed a break. But if I wanted food, just boom, he'd give me food. If I wanted to, and if they fixed my computer, so I didn't know anything. It was like learned helplessness, which is what I do in marriage a lot too. You know, you shrink a few sweaters and you don't have to do laundry anymore. It's the same sort of thing. Yeah.
Yeah, I do the same kind of thing with tools. I'm like, wait, what do we have a hammer?
Which one is the hammer again?
Yeah. I did that with tools. My mom tried to convince my wife that I actually know what I'm doing with tools. By the way, I don't. But my wife was like, nah, I'm just going to keep doing all the stuff myself.
My wife does all the stuff too. But every once in a while, like if it's an emergency, all of a sudden I'll grab something. And I do know a little bit. I just pretend not to. And she'll always be like a tell. She'll look at me like, Jesus, you could have done that. Like just the other day, I let it slip. I just said, order the new faucet. I'll just put it in myself. We don't have to have one of the plumbers come out. She's like, you know how to do that? Yeah, I know how to do that. So, anyway, is Kevin almost ready? Do you know or no?
No, I don't see him in here yet. But back to the equity. Whoop.
Oh, he isn't. Just as we said, there he is.
He's just starting to join us. So I just actually tweeted out that he's about to join us. So.
And Luis, tell us when he's ready, because there is one more thing I want to cover before he comes on, and that's the move in Bitcoin. So you saw on the 2nd, the president announced the strategic Bitcoin reserve, the strategic crypto reserve, whatever. It shot up 11%, didn't eclipse 100,000, and got pummeled afterwards. Now it had some buoyancy today, but I thought that was a big deal that it didn't clear 100,000. And I don't want anything to do with it. And I am long it, of course, but I don't want anything more to do with it until it can settle above that 100,000 level from a psychological standpoint. And technically it looks pretty strong as well. Do you agree?
I think technically it looks weak.
I meant the level looks strong. I said that wrong.
Oh,
the
yeah.
100,000
sure.
level.
Yeah. I mean, I'll go with that. It's a round number. And I think especially in a less mature market, guys, don't get mad at me, in a less mature market, which is Bitcoin is, these round numbers are even stronger than they are in mature markets, and they're strong in mature markets. So I'm not making fun of Bitcoin, guys. Don't get upset.
Yeah.
But right now I'm looking for short signals in Bitcoin, not long signals.
Right.
And the short signals right now, I'm basically fighting the 50-day moving average and the rotation zone versus the 200-day moving average. So I'll still say the 200 tends to be stronger. But I am looking for short trades. If I don't get a short trigger, then I'll be looking for long trades, obviously, because it's going to flip. But Bitcoin, to me, you know, when I look at it from the perspective of it moving on something like that, I think, and this will be fun to talk to Kevin about too. I was watching a Natalie Brunell video the other day, and she's been on our other show, and she'll be on again soon. She's actually committed to coming on.
She's great.
And she said Bitcoin is backed by energy. And that's something I've been hearing a lot lately, but I haven't heard it before. And, you know, even Luke Groman, when we were talking to him, sort of said that it was backed by energy. And this is a new talking point for Bitcoin people. And I want them to explain this. And maybe if they could explain that, because one of the complaints was it's not backed by anything. And my retort was always, neither's the US fiat.
Or the tulips or the Honus Wagner baseball card. But anyway, our guest is ready to come in. And
Yeah.
I certainly hope that he is a Scooby-Doo fan. Well, we will be finding out. And another thing is, Bobby and I say this all the time. Well, I say it, and Bobby nods his head, which is that you might think that Bobby and I are full shit, but you cannot argue the fact that we get great guests. Perhaps that's being in legacy media for 25 years each, as we had. Today is no exception. We have Kevin Green, who is the chief financial correspondent for the Schwab Network. Smart guy, friend of the show. Let's bring him in. Kevin, how are you?
There he is.
Did you, were you a Scooby-Doo fan ever?
Yes, actually, I grew up on that.
Okay, so this is important now because we were having a little dispute because I was like pretending that Bobby's my sidekick, which he loves that. But I said, who's like the weakest sidekick? And he said, well, Shaggy to that guy who wears the red scarf on Scooby-Doo. What was his name?
Fred.
I actually meant Shaggy was Scooby's sidekick.
Shaggy was Scooby, because Scooby's pretty cool.
Scooby's a star. The show's called Scooby-Doo.
It is indeed called Scooby-Doo. And the guy with the red scarf. By the way, someone else came in before and they misspelled it's Fred Jones, because his little message came in before and I couldn't decide who it was. Luis put it up on the screen and it said Free Jones. And I thought that was a directive. I was supposed to free somebody. I didn't know who that was, but then I realized now there's supposed to be Fred Jones. There it is. Google. He said Google says Free Jones, but it's Fred Jones, Ryan. But thank you for that. But anyway,
Free Jones. I had no idea what he meant by that.
Yeah, me neither. But it's Fred, and the red scarf I think was a deal breaker for me wanting to be him. I just can't get away with the red scarf. Anyway, let's talk about markets. Anyway, I don't know if you heard anything that Bobby and I were talking about. We were talking about equity markets in general and the prospect of stagflation, which I think is very real right now. And particularly the fact that the markets are believing that tariffs are going to be solely inflationary and really nothing else, and that CPI is already ticking up, and a lot of the economic indicators are declining. Is the weakness we're seeing in stock markets just based on the fact that Fed needs to ease, but the Fed can't ease because inflation's raging?
I think it's multiple factors. So one, obviously, being the impact of tariffs and how aggressive they are going to be. I think the market actually did kind of underprice and maybe assume that we would not see tariffs actually being enacted, which is why I think we saw that nice little rally today. You're seeing a little bit of wiggle room. If you're kind of looking at the valuation side of the equation too, we were a little bit stretched. And then the inflation picture, even before even talking about tariffs, obviously did ramp up, especially on the services side. And now there's a concern that the good side of the equation is going to ramp up because of not only just the tariffs, but also factors that are just not something that we can control, right? Avian flu, and everybody talks about eggs. I mean, that's something that does actually impact that market a lot, not just this time around. And that's just something that's going to have to work itself out. But I feel like the Fed is going to be in a rock and a hard place. But based on what the market's pricing in right now, I think they believe that the Fed will cut regardless of if we get down to that 2% target.
So I'm looking at the CME Fed watch tool a little while ago, and I now see 3 25 basis point rate cuts in 2025, and then one more at the end of 2026. So very similar to like looking at Atlanta Fed GDP now, way before the GDP numbers are due. I'm looking at rate predictions way before anybody has any idea of what's going to happen. But where does that sort of probability sit with you? Because I'm telling you, man, I see inflation ramping, and I don't see the unemployment rate ramping. And I see a Fed sitting here going, okay, we're not covered on our inflation mandate. We are covered on our jobs mandate. Why should we be doing this? Is this wishful thinking by the market, or does the Fed care more than I like to believe they care?
I think it's wishful thinking. You can make a case for 2 cuts this year. And I'm one of the guys that said, hey, they should not have cut at all, right, when they first kicked it off.
Great.
But you can make the case that 2 maintenance cuts this year could be warranted that would not have a major impact on liquidity or easing in the market in general, right? And if you started off in June and then did another cut in December, I could see that type of path and then potentially a readjustment when it comes to QT, pretty much stopping that policy probably should be the first thing that they actually should have done, because I believe that that actually has more of an impact on liquidity markets in general, treasury markets, than interest rates, which is something that I feel like has gone by the wayside. But yeah, I do believe that the markets has a little bit of wishful thinking, but I'll kick this back over to you guys. Notice how we're not bulled up on these expectations like we were last year.
Yeah.
Last year, we couldn't wait. The market just couldn't wait to have a rate cut, and we were just bidding up the equity market in anticipation of that. Now, which should be happening, and it is happening, now these are actually bearish rate cuts that are taking place.
Right.
And so I think that's kind of the different dynamic that we're seeing right now. But I think we're getting way too ahead of ourselves. I will say, though, you got to be mindful. This time last year, the same thing happened. Re-rating on premiums on a yearly basis usually is shown in the January CPI print. We have to be mindful of that. We did have acceleration in inflation in January, February, and March. And then the April report, we started to see a little bit of a fall off. We could be experiencing the same thing this time around, but that doesn't mean that we still get down to our 2% target. It does just mean that maybe some of this stuff will kind of subside. And I'm kind of a believer that that April print's going to be make or break for the Fed. And if it is really elevated, your 3-month average, which is what, 3-month or even the 6-month average, is still not going to line up with what the Fed's target is going to be. So it's kind of April make or break when it comes to that report and the and Fed cuts for even a June cut, in my opinion.
So I got so many questions about that, dude. But first, I'm going to ask you this, because I agree with Bobby that inflation is going to stay elevated, but I don't see it going much beyond 3%, just because when it spiked before, that had to do with massive supply shocks as well. I disagree with Milton Friedman. I think inflation is mostly a monetary phenomenon, particularly when it's combined with something the supply side that happened. You can't see any scenario that, well, not any scenario, but you can't see a reasonable scenario where inflation shoots back up to 4%. And Bobby, I'm going to ask you this after I ask Kevin. What do you think, Kevin?
Not without a logistics or a supply shock. Right now, it would be the only way that I think that you would sustain that. And the way that we're kind of going right now, you can look at crude, right? I mean, we're getting close to $65 for crude. And if you kind of look at a longer term chart, I mean, I'm telling Bob Iaccino this. I used to watch the guy on CNBC talk about crude.
Don't stroke his ego. You stop that right there. He already thinks he's too smart.
Hold up. But if you kind of look at the trends on the longer term chart, two things that you don't want to have happen is a break of the 200-week moving average for crude, which we have been broken under that for the last 2 months or so. Usually that means that we have an economic downturn. And if you kind of look at the average over the last 5 years, you do not want to break below $65, because I feel like there's going to be a massive gap between $65 and say $45 that we could see for crude. Now, people are going to say, hey, that's going to be deflationary. Consumers going to love that. That's not always going to be the case. You don't want to see a massive break in crude oil when supply itself is really not ramping up that aggressively. We're holding on to around 13.3 million barrels per day here in the United States, give or take, depending on who you want to look at. And then you're bringing on maybe 2 million barrels in the next 2 years from OPEC, according to their report. It's demand side. Everything that has been pushing prices up for energy products as a whole has been all supply side and logistics driven, nothing on the demand front. And even if China starts to expand, because this was my bull take for this year, even if it does try to expand and it does get this 5%, 6%, or even 7% growth this year, is it really going to pick up the slack enough to stabilize energy prices? And I don't think that's going to be the case. I'm a little bit more concerned about crude moving down, and I think that's going to be deflationary. And I'll answer the last part of your question. Tariff policy is going to be inflationary to a point, right? We're going to see the initial shock, but if you think about it over the long term, it will be a demand destructor as well. And so that also is going to be deflationary. So I think there's kind of a mixed bag here when you're looking at this picture. Do I think we get to 2% by the end of this year? I do not.
Hell no.
Do I see us getting the 4%? Not without any type of geopolitical crisis. An Iran conflict hitting their exports of 1.8 million barrels a day. Reacceleration of Russia-Ukraine conflict doesn't look like that's going to really happen. So I don't see where else we get any type of supply shock on the energy front. And the reason why I bring up the energy is that is where you see the most pressure traditionally.
Bobby?
So there's a lot there. And I want to start with the energy part of it because I think you're absolutely correct. I think people love lower energy prices, but when you get a lowered shock like that, it doesn't work through the market like you would hope. You know, it's not the same as you went into Best Buy to spend $2,000 on a TV and they went, congratulations, it's only 500 today. It doesn't work like that. Energy dropping that quickly leads to fast and massive layoffs in the energy sector and the energy services sector. And we've seen this, it actually produces big jumps because the energy services sector specifically and the production sector of actual crude oil, those guys go right to the unemployment rolls. They go right to getting their unemployment checks. They don't get severances. They don't get they don't get gig work jobs immediately because they're working in the frickin' Permian Basin where there's not a lot of demand for Ubers, right? So those guys go right to get their unemployment checks. So you'll see that in the jobless claims number as well. And to that point, and I want to throw in a question by Tim McLean toward the end of this little mini rant. Let me go to Tim's question. Tim says, any thoughts on the new administration trying to cause a slowdown recession? Charlie McElliott and Larry McDonald both put this concept out there. They're not the only ones, Timmy. Jared Dillian put it out there as well on his podcast with Tony Greer, which is a good one. It's called, what's it called, Jimmy? The Dirt?
The Dirt podcast.
Macro Dirt.
Macro Dirt, right.
Yeah, Macro Dirt.
It's a good show.
So Jared put that forward too, and he actually went so far as to say that Scott Bessent actually said it, and he pointed out that during Trump's first term, he. By the way, I don't think Tim is a big fan of Trump. He's also not a fan of Alex Karp from Palantir. Tim and I are really good friends, by the way, and he's also not a fan of Vivek. So I want to throw those out there. He put forth also that Scott Bessent has actually talked about we need to get yields and crude oil down, both of which are happening, right? And he's a smart guy. I don't think Trump has the economic knowledge to actually play 4D chess with the economy. I think Scott Bessent might. So they are, in my view, deliberately trying to cause a slowdown. And energy is a big part of it. And one of the things that shocked me, Kevin, was hearing OPEC on March 3rd say that they're going to go ahead with their December plan to increase production and do away with the voluntary production cuts. And they said it's based on market stability. And I looked at the chart. I'm like, the fuck are they looking at? Right? So if you could answer Tim's question, if you got any comment on anything I just said, please jump in.
Yeah, so I'm going to say the first, Trump administration actually foreshadowed this. They are doing the same thing. And I'm not going to comment on, Trump, if I like him or not. But what I will say is that he's trying to create a price war in the energy complex. The whole, drill, baby, drill. There's not really any, real substance there, but drill, baby, drill. He wants to have favorable drilling terms here in the United States. But these energy companies, they have no incentive on increasing CapEx if the policy is going to be push the prices down. Why spend more money when the product that you're selling is going to make you less profits? But bringing in Saudi Arabia and bringing in OPEC, also becoming a little bit more friendlier when it comes to Russia, does allow for not only additional barrels to be put online, which obviously is actually going to impact OPEC countries, especially the smaller ones, because there's definitely a rift there. We already know that there's a problem. They're trying to hold OPEC together as much as they possibly can. But I think that you are looking at a price war that they're trying to build out here. And I think they would rather have the Saudis provide the heavy sour crude. And then once again, kind of put a little bit more pressure on Canada, which is, I think, another reason why we kind of saw this whole thing go the way that it did. And then it's also going to put pressure on the integrateds here in the United States, putting pressure on Eagle Ford, Permian Basin, things of that nature. It's a price war. And this is the same thing that happened. So people, for historical reference, the first time around, Bobby, they did the same thing. Yep. Saudi Arabia spent so much money on expanding their capacity that they had not even used yet. So they expanded their capacity by like 1.8 or almost 2 million barrels. Some are saying 4 million. I'm not going to go that far. Let's say it's about 2 million barrels that we could probably, actually confirm. They spent all that money and then they weren't using it. That's the problem that they have right now. And so I think which also then pissed off the Saudis, which I'm kind of surprised that they're going back and doing the same thing again.
Yeah,
I wonder.
I haven't heard anything about Jimmy. Maybe you did, but I haven't heard anything about like Trump pressure on the Saudis, because obviously drill baby drill takes a long freaking time. By the way, Tim's correcting me. He's okay with Vivek. Drill baby drill takes a long time.
But the talk of it is usually something the market welcomes. But let's take a quick break right here. Luis, can you put up the banner? There is a favor that we have to ask all you guys watching. Please give Tradier Pro a shot. You have a 3-month. We're offering a free 3-month trial with it. This is an outstanding options pricing and trading tool. Tradier is an excellent company. 3 months free, no cost to you. Please click on the banner. Please click to, I don't know if click on the banner is right. I just sometimes just say things. But anyway, find the link. I barely even know what a link is.
You can scan the code. You can scan the code. You can scan the code.
Scan the code. That's that's the buzzword I'm looking for. I don't know. Bobby should really be doing this commercial. He knows more about this shit than I do. But Bobby, back to this, because this I think is a fascinating discussion. But I do want to circle it back to what you call it, equities at some point in time too. But the oil thing is fascinating, Kevin. And I think here's what I think you guys are saying, that the Saudis am I jumping to a conclusion saying that you think they're maybe a little more scared of Trump, a little more they want to bow to Trump? You're not saying it, you are saying. Kevin, can you expand?
Yeah.
I don't think they are. I think they want to spend money. They want to do deals with Donald Trump. I mean, they're talking about spending $600 billion here in data centers. And then it just so happens that they're going to go, OPEC's going to go against the market trends, which has been deteriorating ever since they've been holding off on bringing production online and now kind of switch. I don't think the Saudis are scared of Donald Trump. They know that he wants to make a deal. And I think that's a leg up for them.
Yeah,
I think there's also just real quick. I think there's also the political pressure of what's happening in Israel and Gaza right now that also kind of links into this whole thing. You need allies over there right now, and I think that's also an olive branch that he's trying to extend. But once again, I think some of the best leaders in history either inspire people or they get. And they can do both, right? Or they get people to try to challenge each other, right? To become the best that they can possibly be amongst themselves and to create competition. I think Donald Trump does a phenomenal job with the competition piece there. And I think that's exactly what he's trying to do. And I think he's looking at a race to a bottom.
Bobby, I want you to comment on this too, because maybe I take the fear part out of it, but they want to work with him. That's what Kevin's saying, right? You think so too, Bob?
Yeah. So first I want to debut. I feel like I have to say that this is the first time I voted for Trump, and I did not vote for him on the previous 2 elections, but I did in this one. And because I think he's the right person for this particular time. The reason I'm saying that is because I think Kevin and I are actually saying the same thing here. I said, yes, they're afraid of him. Kevin said, I think they want to work with him. I voted for him, but he's a petulant child, right? He is. And if you treat him wrong, he won't work with you. And that's the fear part that I was saying, which is essentially Kevin's nicer than me. So
it's just a business plan by them.
Yeah. It's just a business plan by them. They decided to preemptively say, you know what, I'm going to do what Trump's going to kind of go out publicly and threaten us to do anyway. So we'll just go ahead and do it. And then he'll go out there and take credit. And he'll say something like, the Saudis knew I was good. By the way, can I debut my Trump impression?
Yeah, let's hear
it. No, it's not verbal. It's just this. That's it.
I think you nailed it.
But I think I think that he goes out there and says things and he takes credit for things. And Saudi's like, he's going to take credit for it anyway, so we might as well do it. Which I think is basically Kevin was like, they definitely want to work with him. They want to invest here. They want to build plants here. That's been true since his first term. Whether they're oil processing plants, which there was one, I have a guy that does security for a lot of the Saudi, I don't want to say royals, people who are just below the royals, who deal with the royals. And they said that actually Saudi Arabia is trying to push this was back in the first administration, push the dropping of regulations so they could build refineries here in the US because they feel they can build them faster and better than US providers
Mike
can.
Wirth, the CEO of Chevron, said there'd never be another refinery built in the United States, but he said that during the last administration. And by the way, I'm about to call bullshit.
I think Mike said that he didn't think Trump would win. So
yeah, and I think I'm going to call bullshit on something that you said, Bobby. And this is a very rare thing. You said something that I don't believe even you think is true. You said a second ago that I voted for Donald Trump because I think he's the right man for the job. I think you voted for Donald Trump, and you have to elaborate on this because of the two people involved in a binary choice, he was the better choice. Because I think I remember saying Vivek was probably your guy.
Maybe Vivek was my guy.
So am I right, or are you right in the way you said
No, you're right to call bullshit on that. But also, like, I didn't vote for him the first two elections that he ran. I didn't vote for the Democratic candidate either. I voted for the two libertarians. This time, I actually couldn't even find the libertarian on the ballot. I don't know who ran as a libertarian, but I would have voted for Trump anyway. But yeah, you're right. This was the worst choice of the previous three that were offered against Donald Trump.
Yeah, that's what I believe too. And I was, again, I'm not political. I care about policy. I thought from a financial standpoint, we were on a trade.
Yeah, I agree.
Heading for the rocks, whatever. Let's talk about equity markets real quick here. Ever since we put in that high on February 21st, we just got the crap kicked out of us, Kevin. And it's because of stagflation. You know, it seems to me market position as well. Do you think this move has legs to the downside? What would give you an indication that it does, and how far down do you think it could go?
If we still see lack of liquidity and book depth, if you're looking at the E-mini S&P 500, I think that's a really good indication, right? The intraday volatility, I think, is going to be the main factor here. Hitting that 200-day moving average for the E-mini S&P 500 is a key area, right? So I would not be surprised if we actually do see a bounce. I think what people really want to hear now is, do we go down in a straight line and do we go up in a straight line? And that's usually not how corrections work, right? They usually, you pull back a little bit, you consolidate, trade in a range, break down a little bit more. What do we need to see further deterioration in this market? You need more events. The thing about these pullbacks that we've had over the last year and a half, 2 years, is that they've been one-off events that have been very isolated. We digest it and move forward. Yen carry trade, digest it, move forward. Trump, the assassination attempt, digest it, move forward. We never had a situation where we've had 3, 4, 5 different critical things that have been in the air at the same time, where people are just saying, you know what, screw it, I got to liquidate right now. I got to get out and let the dust settle. So I don't know if we're there yet, but I would say that we're in that first phase. If we are going to see a material breakdown, a cycle type of breakdown, this is the level that you want to be able to be at here. I just don't know what else is on the horizon that can actually drive us further to the downside.
So Bobby, Mike Arnold yesterday in our other show said we're right on the cusp, the 5,800 level. He said 5,808. If we settle below that for the week, he thinks that's the open Bombay doors and we have a more significant move lower. You still think that, right?
Yeah. So I want to actually throw my theory out to Kevin here. And by the way, I throw this theory out, Kevin, in fairness to the public, because if it does happen, I'm a genius. And if it doesn't, everybody forgets about it. So
that's what us pundits do.
Yeah. Real quick, that level was 5,809, and it was a trigger for a massive double top pattern in the S&P. I think it was the S&P, or was it the NASDAQ?
S&P, sure. S&P for sure.
The S&P, and it was the S&P futures he was using, not the SPY or the SPX. And he has targets well below, and they're measured move targets. So it's a very reliable pattern, but it will take some time to play out. So here's my theory. And good old Widge. I mean, Tim corrected me too, but good old Widge. In terms of this year, okay, and I'm better at describing what's going to happen rather than when it's going to happen. I think there's going to be anywhere between a 15 and 30% drop in stocks. Now, 15 is easy and it's not going to scare people anymore. A lot of people have seen that. 30, I think, will scare people. And I'll tell you why. And you tell me I'm nuts. Tell me it's not going to happen. Tell me my timing's off, whatever you want. It's based on the idea that Trump and Elon and Besant and you could throw Cash and RFK and Tulsi in there as well, being so sort of disruptive that Trump in 2016, 17 tweeted about the stock market like 68 times in the first 100 days, 0 this year so far. Because I think that Scott Besson has convinced him, look, its stocks are going to go down, point to other things for now. And I think that 15 to 30% drop is predicated on them having success at basically our own US version of austerity, which I think is what's happening here. And I also think if we get this, it's a multi-decade long. Like it starts a 20 or a 25-year bull market, the likes of which even Jim and I at our advanced age have never seen. Okay, call me.
So hold it, Kevin, before I want to add something, another layer to it before you answer too, because we've been saying this all year from the beginning of the year too. You cannot go through a disruptive phase, through a transition phase, even if you've convinced yourself that we're going from bad to good. You cannot go through a stage like this, a transition, without having some inelegant, sloppy hiccups along the way. Do you agree with all the things that we've said now? Is 2025 going to be somewhat of a shitty year, economically, asset-wise?
Ooh, okay. So economically, yes. Equity-wise, I don't know yet.
This was a lot. Go ahead.
Well, yeah. You know, here's the reason
we
why.
We expect a lot from you, Kevin.
Yeah. Okay. Let's call it like this. S&P 500 weekly chart. We've broken the weekly uptrend. You look at a monthly chart. We've finally crossed below the bear signal or the sell signal for RSI. Bearish divergence on that monthly chart as well. I know I'm saying a lot, and I hope that people that are watching this pull up a weekly chart of the S&P 500. Look what that weekly trend looks like from those October, basically the bull run. So that October run that we had in 2023, all the way up, that trend line has been intact. It is no longer intact. That's a big deal. Monthly chart, which no one cares about monthly charts, but you should right now, because here's two things that's happening with the monthly chart. MACD is hinging lower. And that bad boy, it takes a lot to adjust that trend. And RSI, relative strength, is in a bearish divergence, was in a bearish divergence pretty much since October till January. And then now we're hitting that sell signal on the 70. And I want you to go back the last 60 years, over the weekend, grab a beer. Last 60 years, look at every pullback cycle that we've had. RSI crossing below that sell signal, giving that sell signal, and then also look what that MACD is doing. And each and every time over the last 20 years, we've had at least a 15% pullback. We're at I don't know where we're at now, right? 3.5%, 3%, 3.5%, give or take.
A little heavy, you're right. Yeah.
All right. We're not even halfway through like the shallowest of shallow in this whole cycle here. So technically, yes, I agree with you. When you're looking at the technicals. And then fundamentally, it's real simple. Real simple. Are we cutting spending? We're canceling contracts left, and we're canceling stuff that they don't even know what they're canceling, right? That's how aggressive this thing is getting. Are we cutting money and we're cutting funding? Yes, right? We're not spending as much from the government side of the equation. Is that going to have an impact on the economy and GDP?
Hell yes.
Okay, cool. Yeah. Are we cutting jobs from the federal government?
Hell yes.
All right. I think low key they actually want to try to get to at least 1 million on job cuts for the government. I think that's what they want to do when everything's said and done. So let's just say they cut 500,000 jobs by the end of this year, which is actually doable, right? I think they just said they're going to do 10,000 from the IRS, 10,000, 20,000, 45,000 from the IRS. I'm lowballing these numbers.
Yeah.
So are we going to increase unemployment? Are we going to have more individuals unemployed? Yes. Are we probably going to be cutting benefits on the state level for a lot of these states? Probably, because a lot of these states,
a
lot of these states. Okay, throw all of that in there. Take the private capital side of the equation out, because private capital will increase as far as investment this year. And if they're smart, they would do it when everything looks really bad, because that's when things are cheap. That's when people buy property. That's when people invest and build out manufacturing operations. That's when people buy and at least get the contracts in for commodities as well. So lower spending, lower jobs, consumers already stretched. Consumer credit utilization rates are really high. November, we saw a contraction in consumer credit and revolving credit. That like rarely happens outside of a recession, right? So we have all the ingredients for an economic slowdown, and we have all of the ingredients needed for a pullback in the markets. I don't think it takes a real big genius. Hey, you spend less money, you get less multiplication of money gets gets less and less. And I think that's
Jimmy, you
what
got to like the part that says it doesn't take a genius to come up with that, because I came up with it.
I'm sorry, I didn't mean it like that, but
No,
Yeah,
but this is everything here.
Guys we love, so don't ever stress. We're from the trading floor. We don't give a shit what
We
you
don't give a shit. But what Widge is saying is 100% correct. This is literally what we voted for. There was going to be we voted for 2025 to be a painful year in order to trim the hedges to make them grow better in the years that follow. I don't think if this is a surprise to anybody, they weren't really paying attention. Kevin, looks like you want to say something. Go.
oh yeah. Just real quick. Look, everything that I said, the ingredients are there. The scary part for me, and this is where I'm going to diverge from you all, it sounds like. You voted for the austerity, but has it ever been proven that they can time it right
No.
on the fiscal side? I mean, monetary side, we already know that there's going to be a problem.
No.
But on the fiscal side, can they time it right? And then if they do overshoot, is there a desire in the Congress in order to expand fiscal spend to do so? And you could talk about tax cuts all you want, but you will have to put nominal dollars to work traditionally to get us out of these things. Is there a desire? And I don't think that there is.
So
that's why Tim and I talk about this being a 2-year term, not a 4-year term.
Right. But if Kevin, you're asking us, can this go horribly wrong? Hell yeah, it can go horribly wrong. We know that full well. It could go, particularly the people in charge, like you said, who are pulling the levers, historically don't pull them at the right time. I agree with you that there are pitfalls to this, and I hope to God it works out. I was fearful the other way, that they were spending too much money and it could end up in something much, much worse. A currency crisis or a debt crisis, which, by the way, we were decades away from. But if they come, it's a horrible thing. So it was pick your poison, I think. But I don't disagree with you as much as you think. I think you're making a valid point that they pretend that they're going to thread this big needle and land the plane. There's no evidence to suggest that that's an easy task.
I know I'm the guest, but I do want to pick your brain on this as well. Any concerns about the currency side of the equation? A lot of these geopolitical spats could also put a little bit of a problem there for the dollar if they feel like they're losing relationships.
So I'll answer that very quickly, because I think that's a concern. What a bigger concern for me was the previous administration. I thought with the spend that they were going to have to do, and with the debt service was going to be 1.4 trillion in 2025 and then more in 2026. And then we're going to have to sell a shit ton of long end bonds to cover that. What my base case is that the Fed was going to step in and start buying bonds again, which I thought then the dollar was going to really be vulnerable. And that's one of the reasons we're going to talk about gold swing, because I know you just mentioned that. And because that's one of the reasons I was long gold and silver and all those things, because I thought the dollar was at a significant risk. The dollar is still at a risk with Donald Trump for the reasons that you say, but I don't think it's as significant as the one. If the Fed started buying bonds again, I think the market would have been like, that would have been the oh shit moment, in my opinion. Bob, do you agree?
I do. And I want to throw a little bit of a wild card in here and ask and answer swing traders question at the same time. I had a standard answer for the dollar, right? Where I said, this is a short-term phenomenon, blah, blah, blah. Germany threw a wrench in that this morning. I don't know if you guys watching are aware of what Germany did, but Germany essentially they proposed legislation to get rid of their debt brake, which is something we should have had for years and didn't. There's a spot where they can't accrue any more debt, and the reason they're doing it is for defense spending. Now, it doesn't mean it's going to get passed, but the freaking DAX was up 3% today. The euro was up close to 2%. Copper was up like over 5%. Part of it was that, obviously. So there were big moves. The currencies seemed to believe it. So my whole thing was going to be that you can't get growth globally if the US slows down, and the currencies will the dollar will be weak and then balance out and everything will kind of stabilize. I'm not sure if Germany is going to start accruing debt and spending on defense, and any of the other European countries kind of follow suit. They now can have a strong economy without the US, in my opinion. But to swing trader's point, he says, do you have expectations for gold this year? Is there any more upside potential left? I say there is, but Kevin's a guest. I want you to talk about
it. For this year, yeah. I mean, I usually look at markets on a 2-month, 3-month basis. So
that's why we love you.
Yeah, could it go up for the year? Maybe, I don't know. I do believe, and I wrote about this on my Twitter. You guys can check it out. Wrote about a whole bunch of stuff, but I do believe that gold is primed for a pullback. And I do believe that the pullback going to be around 2,700, 2,730. Actually, if I want to be kind of precise, I think we are kind of due for that. Everybody and their mothers probably already talked about this, this repatriation from London to the United States.
Yeah.
So I won't bore you all with that, but I will kind of bore you with some of the mechanics that actually happen on the COMEX, or basically on the CME. It was a physical short squeeze that was actually taking place. And what I want to be able to highlight here is that those were bona fide hedgers, the JP Morgans of the world, Deutsche Banks, you name it. You trade gold, you were putting in delivery to intent notices because they're short those contracts. They were getting the physical overseas. They were basically, putting that intent to deliver the physicals and then offsetting for customer accounts because the customers really wanted to get it. The thing is that massive unwind, we're at levels, I don't even know if we hit COVID levels yet, but I'm pretty sure we probably should be damn near close to COMEX hitting COVID levels. But do you have those institutions going back out and repositioning? And do they have a reason to do so? And I don't know if you do. We just saw a generational shift, a once in a generation shift. And when I say generation, COVID was a generational event, in my opinion, right? You don't see what we just saw over the last 2 months, 3 months. That stuff just does not happen in the manner that it did. So do you actually have institutions and producers still going out there, and bona fide hedgers still going out there and layering on positions to provide stable price structure? And I don't think so. We will know in the next 2 weeks because first notice day on the April contract will be coming up in 2 weeks, 3 weeks or so. I think it's in 3 weeks. If you don't see those delivery notices ramping back up again to create that short squeeze in the physicals, I think that's where you lose a lot of momentum. And I'm a firm believer that this is all managed money that's playing around right now, that there's nobody that actually has physical skin in the game at these price levels. I think we come back down 2,700 and then we move forward from there. Bearish divergence when you're looking at CCI on the weekly chart for gold as well. So.
Yeah. Interesting. I don't necessarily share the same opinion, and it could change based on the technicals. But the fact that we traded lower for about the last 6 or 7 days and then had a significant bounce, I think we hit a bottom on Monday and rejected that. To me, it was a pretty impressive rejection. So I'm still somewhat of a bull. I'm not saying, technically it could break down quickly.
Yeah.
This could just be there's a pullback in that. And I think that's an interesting take. Bob, you have any closing question or we wrap it?
No, the last thing I'll say about gold is a pullback. Mike Arnold said the other day, and I tend to agree with him, that he doesn't worry about gold until it's below about 2,600. So Kevin's pullback to me doesn't take upside away from gold. It just gives you a better average price. The way that gold is trading right now, for me, the last few days of rally backs have been flagged to safeties. They haven't been fundamental. They've been on lower volume, and they've just been sort of people kind of speculating in gold, trying to get these things
and
happen.
To Kevin's point, move back down to 2,700. That's not even 10%, correct? It's just
that's
a normal trading, pullback. Yeah.
For me,
all right. Let's wrap it there. We have producers who got to get home, and we don't want them to clock us for overtime. Is that cool, Kevin? You got anything else to say? Where can people find you?
You could follow me on X, Twitter at KG Bull and Bear. And guys, I really do appreciate you having me on. You guys always do really good work. So I hope everybody's profitable in their trading and don't get freaked out by this volatility. It provides a lot of opportunities in this market.
Love it. Wise words from young Kevin. We appreciate that, Kevin. We appreciate your insight very much so. And thank you for coming on. This is Tradiers, the Trader's Edge. I'm Jim Iuorio. That's Shaggy. That's Kevin Green. More importantly, I want to thank you guys for the support you give us. All the retweets, all the DMs, all the support. We are humbled by it in both our shows. We are amazed by the amount of viewership and how much you guys participate. Thank you guys very much. See you soon.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.